Hi and welcome to Master Investor 2019. My name's James Faulkner, I'm the editor of Master Investor magazine, and I'm joined by Lucy Macdonald, who's manager at Brunner Investment Trust. Hi Lucy, good to have you on the show.
Great.
Just tell us a little bit about Brunner and what its investment objectives are. It's an investment trust, it's been going for around about 90 years now.
And it is to provide global growth and income.
Right.
And it's a concentrated global portfolio, which we have made more global over the last few years since I've taken it over, and concentrated down the number of stocks to give it some better conviction and be more active.
Right, so the stock composition has gone down from how many stocks to
We're down
about
to
70
just
now,
over
is it?
60 actually,
Right.
And most of the portfolios that I run are very concentrated and active. And Brunner historically has been more broad than that. So taking it over in 2016, we've been moving it to be more concentrated and taking it up to have better conviction.
Right. And how does the portfolio look in terms of geographic weightings, that kind of thing?
Well, we tend to really focus on stocks primarily, and then when we put the portfolio together with all the stocks, we look at what sort of the resulting geographic allocation is. So it's very
bottom-up
driven.
kind of, yeah.
And so when you look at the risk and the return in the portfolio, it's primarily driven by stock selection. It is slightly higher in the UK. It has 30% of its benchmark is in the UK. And the reason why it hasn't got a full global benchmark is because it's got a yield and a need to grow dividend. And the UK is still a very high yielding market. So it does make sense to keep a certain amount in the UK for that. However, we can shift quite a lot around. We're not really driven by the benchmark, so we can go down to a relatively low weighting in the UK if we wish.
And you aspire to grow the dividend above the rate of inflation every year, don't you? How do you go about doing that?
Well, we have some very good dividend cover now. And in the last year, we have restructured the balance sheet, which has meant that we've both got higher dividend cover, but we've also got higher reserves as well. And that's enabling us to really commit to keep the dividend growing. I mean, it is a dividend hero trust. It's got 47 years of dividend growth in it, so it's a big objective for the board to keep that going. And we're more confident than ever that we can do that because of the actions that we've taken.
And tell us a little bit about how investment trust, the sort of special, the special sort of structure of investment trust that enables you to sort of keep the dividend growing, even if the income into the trust every year isn't sort of covering those dividend payments.
Well, by having a revenue reserve in the trust, it means that you can smooth out the dividend over time. So if there are times, and there have been in history, where the earnings and the income of the trust is under pressure because of some short-term moves in the market, then it is possible to dip into the revenue reserve to make sure that you can keep the dividend going, and that's really what we've done.
Yeah.
Now, where we stand at the moment, we don't need to do that because we've got good dividend cover from the income itself, but we also have 1.5 years of revenue reserve, which is very healthy. So if we ever need to use it, we can. Right.
And the trust is trading at a substantial discount at the moment, isn't it? So what does that mean for investors?
Well, it means it's a cheap way of getting into a good portfolio. We've shifted the discount range has been very wide in the past for a number of reasons, including the balance sheet, which was quite inefficient with some very high cost debt.
Right.
And by rescheduling that debt and getting cheaper debt, we now have brought the discount into around about a sort of 5 to 10 kind of range, and historically it was sort of up to 15%. And over time, as we get the performance coming through and we keep the dividends coming through, we think that discount will gradually close.
Okay. Lucy Macdonald, thank you very much.
Thank you.